Hey everyone, just gonna give it a second um to let people come in. Thank you for joining me this morning. Um, so I like doing these things. Sometimes it's fun to get to chat about what I'm seeing in the market. I get asked a lot about what's going on in oil markets by various folks. It's sort of one of those weird, interesting things where sometimes the people that you think would know what's happening are just sort of like asking each other in confusion as they look at data and they look at price and they don't always meet. And, some of what I imagine you might be looking for from me is certainty, which I cannot offer, and hopefully I never pretend to offer. And there's always sort of this running question in markets and in both fundamental and price analysis on what's happening and why. And often it's sort of the best guess or sort of triangulation. It's sort of what makes markets so interesting to me and why I've been sort of drawn to them since I was quite young. And um, I think it's just sort of a very interesting project and interesting activity. And in that context, I wanted to share something that came up today that I shared on X and that I think is worth considering. This report came out from one of these open source intelligence folks and was verified and published also by Bloomberg, by one of the Bloomberg reporters who's actually been quite vocally bearish on oil. So it was very interesting to see them disseminating this. It appears that the Saudi oil processing facilities at Abqaiq were significantly damaged and maybe offline for a while, whether that's measured in weeks or months or possibly longer. Remains to be determined. These attacks were denied. All impact was denied. Some of the reporters that are now reporting on this were publishing reports about it being denied. People have gotten very emotional about some of the reporting and discussion on this. I talked about this a few days ago when it first happened, and people were very mad that I would even talk about it, claiming that there was this denial and therefore it did not happen. There's a fog of war. And unfortunately, there is a war going on in the Middle East right now. And so in that fog of war, I do the best I can. Others, I think, do the best they can to try to share their perspectives on what's going on, despite propaganda and despite official denials. And there's sort of this joke that the way you know something happened is that it was officially denied. And that's not always true, but it appears to have been true here. And so why talk about this? Well, right now, WTI oil is at $84 a barrel. The last time Abqaiq was hit, oil went up something like 20% in a day. And yeah, the world was different. But if anything, inventories are lower today, supplies are more tenuous, and this facility was very important to supplying global oil markets. This was a key facility for processing oil and preparing it for shipment out west to then be able to ship via Yanbu through the Bab el-Mandeb Strait, which now there's some restriction there, and some oil is actually going north to Suez and to the bypass pipeline up there. So one reason I think this is not impacting oil prices, which is incredible to me to see, is you can see on the screen damage at Abqaiq refinery. And it's important to highlight that refinery doesn't mean what you may think it means. This is not a refinery that turns crude oil into diesel and gasoline and jet fuel and various other products. This is a processing facility that removes impurities, that recycles water, essentially. Saudi oil fields are under significant secondary and tertiary recovery. And so this is not a facility that produces refined products. This is a facility that processes and allows and purifies and allows oil from Saudi oil fields to be sold and exported. And so this being down does not help refined product prices. This helps crude prices, or at least it should. And this does not appear to be impacting the market price for oil. Neither do the U.S. attacks on Iran in the last day or two that have been reported, or various other attacks, including Houthi and IRGC linked militias, terror groups, whatever, in Iraq and elsewhere, attacking facilities in Saudi Arabia and various other places around the Persian Gulf. So, what is going on? And the honest answer is that no one knows for sure. And there is increased speculation amongst very serious oil analysts who have stayed away from the tinfoil hat sort of world until recently. And it does appear that there are increasingly few economic explanations for $84 WTI, $90 Brent. And I guess I could just leave it at that, that there are, as I talk with some of the most sort of prominent analysts, folks at the different investment banks and different sort of oil affiliated groups and so on, there's increasing acceptance that there may be a finger on the scale for the oil price or oil prices and oil markets. And we know that there is jawboning going on. And we know that there are strategic petroleum reserves being released. And we know that there is inaccurate reporting and that there are fake denials and that there are laundry room fires on ships supposedly reported that end up having suspicious holes in them that look like they were hit by rockets and torpedoes and other such things. And so we know there's a lot of false information, and we know that we're being lied to about oil markets as well as this U.S., Iran, and regional war that's been going on in various forms now for months and arguably for years. And so as we're being lied to, maybe it's not so crazy to think that if we're being full on directly lied to verifiably, that there's something else going on, that maybe there's some sort of market intervention or stabilization trading. We know also that there are other interventions going on in the market right now. Like right now, there is a trade going on, or there was earlier this morning, by the Japanese government to suppress the price decline in the Japanese yen, which, by the way, I am opposed to. I think that's a terrible policy. Currency interventions are, in my view, stupid and wrong, especially by major economic powers like Japan. Japan is a huge beneficiary of a weakened currency. They run essentially an export economy, which has been weakened through massive central bank and central planner intervention for decades. They're a case study in the failure of mercantilism and central planning to sustain economic growth and development. And they actively intervened in their currency market. You could literally see a gap down, a bar that made no sense and was inconsistent with economic activity this morning. And so to the extent that we can observe direct interventions by central banks and governments in currencies this morning, is it such a stretch that perhaps they are also active in commodity markets? There have been a number of trades that have happened in the middle of the night where, if you think about the time to optimally sell a giant amount of oil, it might be not one trade. It might be over the course of minutes or hours, and it would likely be during U.S. market hours where there's maximum liquidity. Instead, there have been a number of trades in the oil market over the last number of months, often suspiciously ahead of announcements of ceasefires and various other oil negative news headlines, where there have been giant quantities of oil sold all at once at what looks like the least liquid time in the market possible, in a day, in a week, whatever. In many cases I think recently this past weekend, as the Houthis were attacking tankers and infrastructure in Saudi Arabia and Saudi oil tankers, we saw a giant gap down, very similar, strangely, to this gap down we saw this morning in the Japanese yen, would gap up in yen value, down in dollar value relative to yen to protect their currency. Suspiciously similar in the hyperliquid WTI oil contract. And I think I saw in a couple of other of the contracts around that same moment. And again, it's quite strange if one were to want to sell 9 figures of oil via a relatively illiquid cryptocurrency. One would think that you would trade that over time and not all at once in a what looks like a price suppression. Another way to frame it: my day job, I run a investment fund. I invest in publicly traded oil and gas companies, and this is not a recommendation, solicitation, financial advice, anything like that. But if I were to go take one of the liquid stocks that I own and sell all of it all at once at the least liquid time, overnight, whatever, in the market, in a market order, I would likely get a call either right away or the next day from a regulator and maybe raided by the FBI. And so, this is not something that people do in equity markets for the most part that I've seen, because it would be like, what is the movie Wall Street, where blue horseshoe, whatever, and next thing you know, FBI is in your office. So, I try very hard to stay very far on the right side of compliance and rules. I put out a notice today. It appears there was one error in how I was calculating my Bison Insights composite that was actually too unfavorable, and actually the returns for that composite were a little higher. So I've been digging in. It looks like there was another error. Usually when you find one error, there's more. And again, you could tell it was unintentional because it would have been even better. There was one more error I found on further review that was negative. It looks like they offset themselves, and roughly directionally the performance for the composite has been consistent, which you can observe through the individual performance of the individual ideas that I've shared, where some have worked and some haven't. And a couple of the ones that worked were spectacularly successful, which explains sort of a lot of the excess performance. And anyway, but there's such a huge incentive, if you like what you're doing, to just not break the rules. And here you have these folks deciding that they want to desperately unload oil futures during the week or oil cryptocurrency at 3 a.m. or 4 a.m. or 2 a.m. New York time, at basically the least liquid moment for those markets, and then selling a day worth of volume or a week worth of volume or 3 hours worth of volume all at once into a completely illiquid market at the most illiquid time. And so this seems very strange to me, seems worth talking about in the context of active currency intervention that we are seeing today, along with this news that Abqaiq has been hit and maybe offline for a while, which could mean 5 to 6 million barrels a day of Saudi oil production off, not rerouted from the Strait of Hormuz to Yanbu, not rerouted up to Suez, off. And potentially with reservoir damage, there were all kinds of stories and issues that we were hearing about for years after Abqaiq was hit in 2019. And it appears similar thing happened, and we are way less well positioned as an oil market for this, with inventories depleted, SPRs depleted, really cutting into reserves, very low levels of oil products, very high run rates of refineries to restock oil products, very robust demand, seeing record highs in flight activity, and really quite strong, despite a weakening economy, freight activity and various other measures, at least here in the US where the data is relatively good. Very a lot of traffic on the streets here in Houston, and you could see the traffic reports and stuff for other, big US cities where, again, the data is really good. And so, and then also ships taking the long way around Africa rather than going through Suez, which increases dramatically global oil consumption via fuel oil and then also via bunker fuel, depending on the ship. So we're in a scenario where demand is up and supply appears materially physically impaired. And WTI oil is, last I checked, it was 83 something a barrel. It's been sort of floating around 83, 84, 83.90 a barrel right now as we speak. So at the very least, it seems like oil should be around $100 a barrel, thus the Make Oil $100 Again hat. Originally, I just had these hats made. I attended the NAPE conference, which was super fun. You get to see lots of random oil prospects and your closest 20,000 friends in the oil industry at the conference, and then at, the various events that law firms and investment banks and oil companies and various other folks host around the conference. So I had a bunch of these made, gave them out, and now I stuck them on the Printify store. If you want it, you can check it out. I donate my net proceeds from those. It's fun to send out this merch, and then I do it through Printify, so it's a little expensive, but the net proceeds, at least to me, I donate. I've been donating them to the Houston Zoo. I need to coordinate with them and set up a bison fund there, to a donation fund or whatever. To I really want them to bring back a bison, and I think it'd be fun to have like a little bison placard there. So please buy a hat or two so I can make some progress on that. And um, who knows, maybe eventually have an event there or something. And I'll explain it just for a second. I got asked questions. Hey, how come you don't want to like donate money for food or whatever? There's tons of food stamps in the US. There's literally like, we have an obesity epidemic, not starvation. Fortunately, we live in a society that's very charitable. And frankly, unfortunately, the US government is overly charitable with our tax dollars. There is not a hunger problem at all. There are many, many resources, overlapping resources, to the degree that it's wasteful, and to the degree that there's an obesity epidemic, apparently even among people on government aid and so on. So that seems well provided. What seems a little less well provided is education. Sadly, not public education, but sort of broader education and enrichment. I have little kids. We go to the zoo. We see many poor children at the zoo too. They have programs where they subsidize attendance. And I think that sort of thing is really important. I like it. My actually former business partner for the investment fund, the co-founder from it, he went off and set up a education fundraising company. It's been his passion, and he got me sort of excited about it. So I like donating money to that. Major tangent, go from manipulation in oil markets to talking about the Houston Zoo and my interest in it. I've got a bison in the background. I think it'd be cool to have. They used to have bison at the Houston Zoo, and then I like the idea of helping support something like that, where there's a clear public good from having it, and I think they do a good job of offering subsidized admission to folks that need it. And I think even for the folks that aren't, I think it's really important to have things like that. Um, I live in Houston, so I support the Houston Zoo, but it's not about them specifically. I think just generally these sorts of things are important. And when we have enough or more than enough, and I know it sounds weird from a capitalist perspective, but I think it makes sense. Buffett says you shouldn't give charity when you need the money. But when you don't need the money, then it makes sense to start to give. And so fortunately, both with Bison Insights, which has been spectacularly successful, and I'm really appreciative of everyone who helped support it. Selling these hats have been supported, very successful. When you're successful, my firm and fund have done very well. Again, this is not a solicitation, but way outperformed the benchmarks, and done really well, fortunately. And some of the co-investments have done great. So it's important, I think, to give back, and I think it's important to find things where, at the very least, is doing no harm. And you look at where too many of these billionaires and various other folks donate money, it's to these policy groups and other stuff that are destructive. I like this sort of local, high impact type of thing, like the Houston Zoo, where you can just sort of see it changing kids' lives as they go there, and hopefully they get something from it and live a little bit of a better, more enriched life. So anyway, I don't donate the proceeds from this. I know it seems sort of ridiculous. What the heck is this hedge fund manager doing with a newsletter? And then what are you doing selling hats? And so hopefully that's the answer. And buy a hat. They're fun. I love seeing, occasionally I see these Bison Insights hats out in the wild, the 250 WTI, Make Oil $100 Again, Drill Baby Drill. It's pretty fun to see. I'll admit there's a selfish component to where I like to see it. But also it's nice to support these good causes. So oil, I think, should be higher. Some of these oil stocks, it's remarkable. I was chatting with a Canadian investment banker just now about the market reaction. If you look on social media, some folks are really excited about XYZ oil companies' reports. And In many cases, they were priced in. In some cases, in terms of these stocks actually being quite expensive versus where they had been historically. And sometimes they have not been. And I wrote an article yesterday about a company that I think is very mispriced relative to its peers. It's a Canadian oil producer and it generates a lot of free cash flow. And it's been a little different for a long time from its peers. And for some of that time, it was pretty negative that they were different. And I think the actions they've been taking recently in the last few years, they've drilled excellent wells. They've done great acquisitions that were highly accretive and very strategic and sort of very obvious. You look at their map sheet and say, oh, okay, they bought this and they bought this for half their current multiple and they bought this and they didn't pay for any of the synergies they're going to get. I mean, so obvious, so good for them. Oh, and they borrowed money at, 7% interest or something to buy an asset that's going to pay for itself in 3 years or 4 years or 5 years, depending on the price of oil, and then has another 10 years of reserves and ultra high triple digit rate of return inventory that they got essentially for free just by buying existing production. Just very obvious stuff. So anyway, there are some of these things that I think are mispriced. Some are up, some are down. In the short term, they say the market's a voting machine. Honestly, in the short term, I think it might just be just full on schizophrenic, running in every direction. In the sort of short to medium term, the market's a voting machine. In the medium to long term, the market's a weighing machine. There are some fantastic opportunities. I found it best from a compliance perspective, from a consistency of disclosure, from a reporting perspective, to just be sharing these ideas in one spot, which is here on Bison Insights via the paid subscription. Again, it's dollars. I make money from it. I'm a capitalist. I spend a lot of time, do a lot of work, have a staff of people that help me with diligence and evaluations and all this stuff. So it's economic to sell it, but also I find it's very helpful for reporting and compliance. And again, like I had a mistake in the reporting. The big mistake was actually underreporting the returns for the composite for these ideas that I shared. So, nothing's perfect. There will be mistakes. I'll get ideas wrong. Some of the ideas I've shared have done poorly. Others have done really well. There's no guarantees. And none of this is even meant to tell people what to buy or not. It's to help inform and educate. But I think it's pretty fun to do. And if you haven't yet, I'd encourage you to come check out Bison Insights. That being said, it has been so successful, and I'm really dedicated to the extent I'm able to, in a time efficient manner, answering questions and engaging with paid subscribers. I think it's a fair thing to do, and so part of that has been raising the price for Bison Insights. As I got over 1,000 paid subscribers, again, wonderful problem to have. Thrilled, like beyond my expectations. It's been fantastic. And I love engaging. I love sharing these ideas. But part of that has been essentially restricting the number of people in order to be able to provide sort of the maximum service and maximum benefit, including being able to chat with people about specific questions they have that are shared in this chat for the Bison Insights paid subscribers. And so part of that has been raising the price. What I've done after getting to that 1,000 subscribers is allow people to lock in the price. So whatever price it is that you sign up to pay, that's the price you'll pay for as long as Bison Insights exists, and not a dollar more. And so as people have locked in at prices after a certain number lock in, I have raised the price. And right now it's the most expensive that it's been so far. And so far it's just gone in one direction. Occasionally there have been sales, but I've been moving away from that for the most part. And the goal is to have a maximally valuable service to reward the folks that signed up early and to try to deliver value that is radically in excess of the price that's paid. And some of that's to cover overhead and so on. And some of that is that I'm a capitalist and I'd rather make money than not make money on stuff. And then some of it's also, like with the hats, just another avenue to raise money to donate to causes that I think are beneficial, while also, I think, delivering meaningful value well in excess of what's being charged, which I think is really important in businesses is to do that and deliver that value to give a lot more than you get. I think for employees, it's important to do that where you want to deliver value way in excess of your salary and bonus and compensation. And I think it's one of the beauties of capitalism. And I get a little pushback for maybe being a little too political on social media, but I have a few things that I feel very strongly about. I really dislike communism. I think that financial and economic incentives are the best way to signal wants and needs via revealed preferences, which are true. You can ask someone what they think and they can say one thing, and then you can observe what they do. And often it's different than what they say. And it turns out that we really care about what we do and we care a lot less, sadly, about what we say. And so I think revealed preferences display the reality that incentives matter tremendously, and therefore communism and socialism always fail. And so I'm very vocally opposed to that, but also opposed to grift and corruption, and have been vocal on criticizing that across the aisle. I have a red hat on. You can sort of guess who I voted for, but I'm openly critical and have been of Democrats and Republicans, particularly where relevant to the oil and gas industry. And in considering my investments and the ideas that I share, I try to be open-eyed. And for example, in January, we were being told by the Trump administration and various folks that there would be a super glut of oil. And it was this very weird thing where the very left-wing media, financial media, oil media, and the Trump administration and some of like the MAGA influencers and some of the like reporters really close to Trump were all saying oil's going down. And so I wrote an article on Bison Insights. I think I made that one public. I really just wanted people to see it and argued that when there is price suppression, which we were clearly seeing in January with the intervention in Venezuela and just all this nonsense on a super glut that did not exist. It didn't happen in 2024. It didn't happen in 2025. It wasn't happening in early 2026. When you see price suppression, you end up seeing shortages and much higher prices. And people misunderstood this and they said, oh, you're whining about the price being low. No, I was analyzing it. It was great. I was buying cheap stocks. My stocks were going up, making lots of money, great opportunities. Whine, don't whine, doesn't matter. Market is the market. It gives you an opportunity. You can buy or sell any given day, is what it is. More importantly, I think, are a couple other things. One, there was a great opportunity, which I identified. And I think that was a particularly good call in the face of a consensus that was very opposed. And then recently, a few weeks ago on Bison Insights, I published there was a major event in the oil market that many people interpreted as a negative price signal. And it was actually a very positive price signal. So I have an analyst at my investment firm who helps me on some of these articles and helps me evaluate companies and oil markets and so on. And it helps. You can, when you're hiring people, you can hire people who are smarter than you and better than you at stuff. Like it turns out that it's actually quite productive to do that. And so it was brilliant Princeton educated economist who works for me. And he helped me realize that actually this thing that all these people were saying was negative, my sense was that it was negative. He was able to go back through and sort of figure all this stuff out and do the sort of joke like, this is my quant, so that's my quant. He helped me figure out that this was actually massively bullish. And so people say, oh, permabulls. No. The data says that oil prices are very likely to rise very soon, within 6 months, but potentially a lot sooner of this particular signal. It hit and off to the races. And it was amazing. Honestly, I thought it might take a month or two. I was going to get a lot more flack, and it worked. So I think the January sort of price manipulation call worked. And I'll get stuff wrong too. Like this is not, I get everything right or anything like that. But I wanted to highlight that this sort of analysis that I did on the Abqaiq attack and on what I think may be happening in the oil market is important to be able to do and to be able to come up with a result that I don't like. And so in this case, I think oil prices should be higher. So I'm a net buyer. I was asked if I have some exposure to oil. I have some minor right tail and left tail exposures that I put on post COVID. One of my lessons was it's just helpful to have a little bit of insurance just in case, not even to, really buffer my returns, but just to have cash when I need it or really want it. And so I have some exposure to oil directly, which I normally don't have, but a tiny via options, tiny fraction of a percent of exposure to oil, which I've added to because I think there are some interesting things happening here in the oil market, like I was talking about earlier. And again, it's not about trying to find um, support for um, it's not about trying to find support for specific ideas or for specific positions. It's about trying to find the correct answer and then positioning in line with that right answer. And then for the newsletter, writing about it. And so, similarly, on natural gas, I was very bullish on natural gas when I launched the newsletter in August of last year. I think the price was like $3 or something, and it rose to $5 an MCF, and people got very bullish and were like criticizing me for being insufficiently bullish in December, where I was saying, hey, maybe it's time to start getting heavier on oil, wrote about how it's oil's turn in the commodity cycle. And then particularly in early January, pounding the table, hey, you got to own gas. That Josh guy, an idiot. Look, he's going to lose money again on this thing, that thing, whatever. And that was actually a great time to sell gas and buy oil. And so I highlighted that. So I got that right. But I was wrong. I was right on price in August of last year, and there was a move up, and it was profitable to have that exposure. And I actually closed one of the positions that had this amazing right tail exposure, and it was almost a 10x. And I wrote about it, and that was great. But the longer thesis was actually wrong. It looks like there's more gas inventory than I was thinking. And the longer term price for natural gas may be lower for the US, let's say for the next 5 years than I was thinking. I was thinking that gas would have to go, let's say, to 550 or 6 or so, inflation adjusted, 5 or so, not inflation adjusted. And it looks like maybe it has to go to 4 or so, plus or minus a little bit, not 5 or so, which matters a lot for the equities because a lot of the gas equities, they went up a lot after I wrote about it, but they're dependent on much higher prices. And one of the companies I highlighted is still up a lot because it was very, very cheap and they've delivered very nicely and they've been hedging. And one of the companies that was very popular and touted by some of my loudest critics on social media and various other folks who have sold enormous amounts, they've gone sort of for the volume approach, I think, on newsletters and so on. They were touting this one particular natural gas producer, which was levered and problematic in my view. And I wrote about it and highlighted that specific company and shared my concerns on it, as well as the superior aspects of this natural gas company that I owned and still own. And so I think that there are some great opportunities, and sometimes they're the greatest when the loudest and sort of most obnoxious people are negative on them. And so, I shared this thing on X from Jerry Seinfeld. He did a speech. He was doing like a comedy routine, and what was it? I think it was the Palestine protesters. They were mad at him for something, and he said, "First of all, guys, you messed up because you bought tickets for my thing. So thank you for the money, and you should go back to your sponsors and say, hey, we should reallocate our stuff. We should have our own event, not go to Jerry's event and pay him money in order to say stuff." And so I think it's helpful to try to navigate things effectively. One of the things that critics do is they help provide signals. And so when everyone was so bullish gas, these top selling Substacks, these alleged experts in X, Y, or Z, the magically experts in everything, so bullish gas, it was a great time to exit the gas positions and get long oil. And I think right now is a great time for me to be adding to oil exposure and to highlight this potential upside in oil, particularly with Abqaiq having been damaged. And there's no guarantees oil could go down, oil stocks could go down. I wrote about this oil stock that I think is massively mispriced. They reported, I thought their earnings were good, and the stock went down. So go figure, right? Like there's no guarantees any given day, week, month, whatever. I'm buying more of that stock today. Share it in the chat. I'm buying more of it. Why am I buying more of it? Because they trade at a greater than 20% free cash flow yield. they trade at half to a quarter of the valuation of their closest comps, and they are outperforming operationally and doing fantastic acquisitions and just up and to the right. And historically, when I've bought into companies where their operations are fantastic and they're delivering on their promises to investors, and temporarily the stocks do poorly, historically that's been one of the best spots to buy. Not bottom ticking stocks or anything like that, but when the stock's doing well, it pulls back. Good results, market misinterprets them, in my view. That's been a great entry point. So I'm pretty excited about that. I published the idea yesterday afternoon. It's one of my top ideas, and I shared in the chat this morning for the Bison Insights subscribers. I'm actually taking two of my largest ideas and reclassifying them as top ideas, adding a few percent to the Bison Insights composite allocation. Net effectively this morning, one of them's up, one of them's down. I really try to not cherry pick any of this stuff. I just say it. It's as of the unaffected price, and then whatever happens. One other thing that's fun actually on this is that it shows that hopefully the returns from the ideas that I've shared have been from being right and not from having an impact on price. And this, I think, is evidence that I'm not having an impact on the short-term price, which maybe is not a great sales pitch for the newsletter, but I actually think it's a great sales pitch because it's not about trading these things minute to minute, which is not my world at all. It's not about me trying to have some sort of short-term impact or long-term impact on the price of anything by talking about it. It's about being right or wrong on an investment thesis, and more right than wrong on more investment theses that I'm right on than I'm wrong on, and with sizing these things correctly where I'm sized up rather than down on my top ideas. So that part's fun. Will I be doing articles on the earnings releases? Yes. I will be. I generally do updates on companies on their earnings when there's substantial changes in the earnings. So if I write about a company, there's a large cap I wrote about where I said, hey, they're going to deliver operationally. They have upside from these sort of secondary businesses. And, here's where I think they could go over time based on that. And they deliver. I could write an article on that and it would look braggy, and it might not provide any additional information or be value add in my view at all versus what anyone else is saying. Do you really need to hear from me that I wrote an article about something 5 months ago about a particular company, and the thesis was X, Y, and Z, and X and Y have happened and Z is happening and the stock is up because of it? I don't know that that's really so valuable. I do these updates, I think yearly is the plan for paid subscribers, and I have this pro tier for the fund managers and family office guys and stuff where I do that sort of quarterly. I just don't know that really adds any value. It might be fun to read, but the goal is to inform and educate, not necessarily to entertain. And so where I've been doing updates on earnings, it's been more about something that's changed, something where I think it's really material. Better well results than expected, with maybe a trajectory for more well results, for more good well results. Acquisitions from a company that maybe wasn't expected to do acquisitions, or really good acquisitions by companies that people were worried about were going to do poor acquisitions, divestitures, similar sorts of things. So I will do updates. I may do a sort of broader update on a set of companies. I'm working on one right now. I got a little sidetracked on it by this composite, and then also by what's going on in the oil market right now, and wanted to do this video. But I'm going to do an update on a couple of my large ideas where they've done acquisitions, and I think there's some interesting operational things happening for them. And I'll probably do that after both of them have reported their earnings and updated their guidance. So I will for them because I think is material. Where it's not material, I may, if you're really curious about my take on one of the companies or whatever, just message me in the chat, and I'll generally share a few line perspective. For most of them, if I'm not updating on them, it's literally because there is not anything material in my view to update. If a company delivers results that are in line with my thesis and in line with expectations, they're just in line. There's not, again, not a lot to say. And I think I've done a good job of sharing when things are not working as well. I think that the big risk here is the U.S. restricting refined product exports. Trump supposedly has a good relationship with Putin, and Putin is blocking diesel exports. So maybe the U.S., if the U.S. were to do anything, which might be unlikely, I could see blocking, let's say, gasoline exports and maybe jet fuel exports, which directly affect consumers, and maybe diesel exports, which impact diesel prices, impact U.S. inflation through sort of flow through the rest of the economy. I could see that, especially with ultra high refining margins. It would be distortionary. It could hurt crude oil demand slightly, but probably not materially. Refining margins are very elevated right now. So if there was a slowdown, or let's say they wouldn't even block refined product exports, but perhaps putting some sort of, tariff equivalent or excise tax or export tax or whatever on them, I could see that. Maybe paired with some tax relief on gasoline taxes at the pump, um, renewable credit requirements. There's all kinds of distortions that have crept into the oil and gas industry. The gas price you pay at the pump in most states has very little to do with the oil price and a whole lot to do with local, state, and federal taxes, environmental laws, which don't actually help the environment at all. They help, voters in Iowa, farm companies and fertilizer companies and so on, in very few states and very few employees, and are very distortionary. There's sort of thing people get mad when I say, hey, higher oil prices are good for the US economy. Higher ethanol prices are bad for the US economy. More ethanol consumption that's required uh, via gas pumps or whatever are bad for the US economy. Forced renewable standards and taxes and whatever are bad for the US economy. You see, these things benefit a tiny, tiny fraction of 1% of the US economy. Oil investment is fantastic for the US economy. Hundreds of rigs running, hundreds of people per rig, these huge, it's sort of like when you look at the US manufacturing base, too much of it these days is really just data centers and some other stuff that's sort of unsustainable. The US rig activity and the US oil industry has been a bulwark on the manufacturing side of the US economy and on sort of the blue collar side. It's very important. It's also very important for US energy security. So I think there's lots of policies that could be changed that could make a lot of sense. And I might be in favor of a, let's say, excise tax on exports on gasoline and diesel and jet fuel, especially if it was used to offset a reduction in local gas taxes and rollback in renewables and incentives and so on. China can be on the sideline. Yeah, who knows? No, truly, no one knows on China. My best guess is they actually have less oil storage rather than more, based on a number of different signals and conversations with folks who sell them large quantities of oil and trade with them directly in size in the physical markets. And so I think China's been trying to stay out of this for now. And I wouldn't be surprised as we get towards September, October, and I wouldn't be surprised if China weaves in a whole bunch of oil and sort of shifts their behavior. It's also possible that through what they've been doing, they've suppressed the price of oil, which is bad for the US economy, as I've argued repeatedly. And I think China, they're central planners, and it's sort of like Japan. Like, they do some dumb stuff, but they also plan out a lot of these sorts of scenarios. And I think they understand that a maximally negative for the US economy scenario is high gasoline prices, high diesel prices, high jet fuel prices, and low oil prices, which I've argued extensively. And so I wouldn't be so surprised if they could analyze this correctly. Again, this is not complicated. This is like barely above AP economics level analysis. Like, this is really not complicated to figure out. The US is a net oil products exporter. This is not complicated. You look at all of the labor and all of the inputs to this. This is really like where you hurt the US is high gasoline prices, high diesel prices, low oil prices, and they're doing it. So I think they're just behaving in a way to hurt the US, particularly ahead of this election where it is getting close. I thought it wouldn't be that close. It is getting close for midterms, particularly on the Senate side. The House, it looks like highly likely per Polymarket and Kalshi, who knows if they're accurate, highly likely to end up Democrat. if the Senate ends up Democrat, it's going to be very, very tough for Trump and potentially good, relatively speaking, for China. Again, the goal of this isn't to endorse anyone, it's just to share an economic view based on a specific question that's being asked. And so this is what you would expect. I would not be surprised as we get towards, let's say, September, to see China first wave in a ton more oil, reset the oil price much, much higher, and then which will take a few months to positively impact the U.S. economy, but where they could potentially buy a whole bunch of oil that's mispriced right now in the face of this, what looks like price suppression, certainly by job owning, but maybe through currency market style direct intervention. And then, so capitalizing on that, essentially taking Besant's money, to use some of the theories that people have promulgated on social media and in private discussions among investment bank oil analysts and traders and so on. So, and then to start exporting huge amounts of refined products within the next few months of that. So I would not be surprised to see that from China. But I don't know. We'll see. We'll see what China does, and no one really knows. This is speculation, analysis, forecast. I don't know. My track record of predicting what China will do is not marred with success, to use a Rick Rule line. So thank you for the responses and for the newsletter product. Yeah, happy to. I was going to do a subscriber only space. I think I'm not going to do that right now just because I have a bunch of other stuff I need to do. I need to get back to my day job. But this was fun. Thank you all for joining. I really appreciate it. I appreciate the support. Please go buy a hat. Give me another $2 or $3 to donate over to the Houston Zoo. Maybe I'll get to see another one of these hats, 250 WTI or Make Oil $100 again hat out in the wild here in Houston. If you haven't checked out Bison Insights, please come check it out. Yeah, the price is more expensive, but it might get even more expensive over time, really trying to limit the number of subscribers and make sure that the people that are there are getting significant value from it, which is really my goal. So I appreciate the kind words. I think there are some folks that are really happy with it. And the goal is to sort of cycle in more people for whom it's really a good fit, where they're able to benefit from the information and education that I'm able to help provide. And with that, I'm going to close this up. And then just as a reminder, none of this is financial advice. It's not an offer, solicitation, or recommendation for any sort of product or service other than an encouragement to maybe buy a hat or sign up for the newsletter. And I am not your financial advisor. And if you make any sort of investment, there's risk of permanent capital loss. And you maybe should consider consulting a licensed advisor. And again, I'm not your advisor. With that, take care. Have a good one.